Is Microsoft plus Constellation Energy the ultimate AI trade? Everyone thinks the AI revolution is being powered by Nvidia chips. But what if the real bottleneck isn't computing power at all? What if the thing limiting AI's future is something far more basic? Electricity. Because every new AI model, every chatbot, every image generator, and every future AI agent requires enormous amounts of energy to operate. And here's the problem. The power grid wasn't built for an AI arms race. Most investors are focused on who builds the smartest AI. Very few are paying attention to who powers it. That's why Microsoft's latest deal may be one of the most important AI infrastructure moves we've seen so far. In a 20-year agreement, Microsoft partnered with Constellation Energy to bring a retired nuclear reactor back to life. Not build a new one, restart an old one. And that single decision could reveal where the next phase of the AI boom is headed. In this video, we'll break down why Microsoft made this move, why Constellation Energy could be one of the biggest beneficiaries of AI infrastructure spending, the hidden regulatory breakthrough that accelerated the project by years, and whether this partnership really is the ultimate AI trade. Because once you see what's happening behind the scenes, you'll realize this story is much bigger than one power plant. The AI problem nobody talks about. When most people think about AI infrastructure, they picture data centers filled with servers. That's true. But servers don't run on hype. They run on electricity, and lots of it. Training large AI models requires massive amounts of power. Then comes inference, the process of answering user requests every second of every day. Unlike many industrial operations, AI can't simply shut down when the wind stops blowing or when the sun goes down. The power demand is constant, which creates a major challenge. Many technology companies have pledged ambitious climate goals. They want clean energy, but they also need reliable energy. And reliability is where things get difficult. Solar and wind are valuable sources of power, but they are intermittent. AI data centers need something different. They need baseload power, power that's available 24 hours a day, 365 days a year. And there is one major carbon-free energy source that already does this at scale: nuclear energy. Suddenly, assets that once looked old and boring are becoming strategically important, and that realization led directly to Microsoft's next move. But Microsoft didn't just buy electricity. They found a way to revive an asset most people thought was finished. And that's where this story gets interesting. Microsoft's massive nuclear bet. In September 2024, Microsoft signed a 20-year agreement with Constellation Energy. The goal? Restart Unit 1 of the former 3 Mile Island nuclear station. Today, it's known as the Crane Clean Energy Center. This reactor had been retired since 2019. Most people saw it as legacy infrastructure. Microsoft saw something else, an opportunity. Instead of waiting years for new nuclear construction, Microsoft secured access to an existing asset that could be brought back online much faster. The plant is expected to generate 835 megawatts of carbon-free electricity, enough to become a major contributor to regional power supply. Think about what this means strategically. Microsoft isn't simply buying power. They're securing a dedicated long-term source of energy in an environment where electricity demand is exploding. In many ways, this is infrastructure arbitrage. A retired asset becomes a critical component of the AI economy. A power plant that once struggled economically suddenly gains a new purpose. And Microsoft gets exactly what AI data centers need: reliable power, predictable pricing, and carbon-free energy. But here's the part most investors missed. The biggest challenge wasn't restarting the reactor. It was getting the electricity onto the grid. And solving that problem may have created even more value. The regulatory move that changed everything. Originally, the Crane Clean Energy Center was expected to restart in 2028. Then something happened. The timeline suddenly accelerated. The target moved into the second half of 2027. That's more than 3 years earlier than many expected. So what changed? A regulatory bottleneck. Grid studies showed that major transmission upgrades might not be completed until 2030 or later. Without those upgrades, the reactor couldn't easily deliver its full output. Operating below full capacity for extended periods isn't ideal for nuclear facilities. So Constellation looked for another solution, and they found one. The company requested permission to transfer 760 megawatts of capacity interconnection rights from another facility called Eddystone. These rights effectively allowed the power plant to access existing grid capacity. The situation became possible because Eddystone's units remained available under a unique Department of Energy emergency arrangement. Their capacity rights were sitting unused. On June 1, 2026, regulators approved the transfer. That approval changed everything. Instead of waiting years for transmission upgrades, Constellation could move forward much sooner. For investors, this wasn't just a regulatory filing, it was a timeline accelerator. And in investing, time often equals value. The sooner a project begins generating cash flow, the more attractive it becomes. But while Constellation was solving regulatory problems, another battle was unfolding elsewhere in the AI industry, and it revealed why Microsoft's approach may be the smarter play. Section 4. Why Microsoft's model may be winning. Not all AI power deals are structured the same way, and that's becoming increasingly important. One approach is called behind the meter. This means a data center sits directly next to a power plant and draws electricity without relying heavily on the public grid. Sounds simple, but regulators weren't convinced. Amazon's cloud division pursued a similar strategy near the Susquehanna nuclear plant. The proposal faced significant resistance. Critics argued that data centers would still benefit from grid reliability without paying a proportional share of system costs. Regulators pushed back. The arrangement became controversial. Microsoft took a different route. Instead of bypassing the grid, its agreement works through the public transmission network. This is called front of the meter. The power flows through the grid normally. Costs remain transparent. Regulatory concerns are reduced, and approvals become easier. That might sound less exciting, but for billion-dollar infrastructure projects, certainty is often more valuable than optimization. Constellation's leadership has repeatedly highlighted this advantage. Because in infrastructure investing, the winning model isn't always the most innovative. Sometimes it's the one regulators actually approve. And this brings us to the financial side of the story, because even if the strategy is brilliant, investors still need to know whether the numbers work. The Constellation investment case. Now let's talk about Constellation itself, because the company isn't just operating one reactor, it's building an energy empire. In early 2026, Constellation completed its acquisition of Calpine. The deal expanded total generation capacity to roughly 55 gigawatts, making it the largest power producer in the United States. Financially, the company has also been producing strong results. Revenue increased, EBITDA expanded, adjusted earnings continued climbing. Management is targeting long-term earnings growth of roughly 20% annually through 2029. That's an aggressive target. But here's what makes the story interesting. Most utilities don't benefit directly from AI growth. Constellation potentially does. Every major hyperscaler needs more electricity. Microsoft, Meta, Google, Amazon, and increasingly, they need clean, reliable power. That's exactly what Constellation owns. A large fleet of nuclear assets that cannot easily be replicated. Building a new nuclear plant can take over a decade. Constellation already owns operating infrastructure. That creates scarcity value, and scarcity often becomes pricing power. But before we call this the ultimate AI trade, we need to discuss the risks, because every investment thesis has weaknesses, and ignoring them is how investors get blindsided. The risks most bulls ignore. There are three major risks investors should pay attention to. First, natural gas. If gas prices remain low for years, nuclear power may face pricing pressure. Cheaper competing energy sources can reduce profitability. Second, AI spending. The entire thesis depends on continued growth in data center demand. If AI infrastructure spending slows significantly, investor enthusiasm could cool, and premium valuations can compress very quickly. Third, debt. Constellation carries significant debt following the Calpine acquisition. Managing that balance sheet requires strong execution. The company must simultaneously restart facilities, integrate acquisitions, and continue investing in operations. None of that is cheap. There's also execution risk. Any major delays, regulatory issues, or cost overruns could impact returns. So while the AI nuclear narrative is compelling, it's not risk-free. Which brings us to the most important question. Is this actually the ultimate AI trade, or is the market getting ahead of itself? Outro. The biggest lesson from this story is that AI isn't just a software revolution. It's an infrastructure revolution. Everyone is focused on algorithms. But algorithms need electricity, and electricity is becoming one of the most valuable resources in the AI economy. Microsoft recognized that reality early. Instead of simply buying more computing power, it secured something even more fundamental: long-term access to reliable energy. Constellation recognized the opportunity too. A reactor that once looked like a stranded asset is being transformed into a critical piece of AI infrastructure. Will this partnership guarantee investment success? No. There are still regulatory, financial, and market risks, but it does reveal something important. The next winners of the AI era may not be the companies building AI. They may be the companies enabling AI to exist in the first place. And if that's true, then the most valuable AI asset of the next decade might not be a chip. It might be a power plant.